So glad you could join us here on a Monday. I'm Marlin Bohling with you as we look at your ag commodity trade. I am joined in studio by Chris Swift of Swift Trading Incorporated, and he's based right here in Nashville. Let's dive into these grain prices here. I'm sure you're all prepared for this, so let's go ahead and take a look here. Corn. We have July corn down 8 right now at 3.62 3/4. New crop December down 6 3/4, so it came off of its earlier low by about 7 cents now. In the soybean trade, we had steep losses overnight. Now July soybeans down 16. We're at 8.26 1/4. We're a dime off of our earlier low. November soybeans down 16 1/4 at 8.48. What about the wheat market in Chicago? We have the July contract. Now down only 2 at 4.36. That's 8 cents off its overnight low. In Kansas City wheat, we have the July contract now trading only 2 3/4 lower at 3.98 3/4. Yep, it's under $4, but it's off of its earlier low by about 7 cents right now. So things kind of elevating here as we get about an hour into the trading session, 45 minutes or so. I see even the Dow Jones Industrial Average is coming off its earlier low here by about almost 200 points now. Yeah. So maybe things aren't as dire as they appeared last night.
I always say if you want to watch just a little while, the weather will change. Well, all you got to do is wait to see what Trump tweets out, and we'll see what the market's changed to. So
interesting how the market is handling all this and absorbing it. Now, it's not that the tariffs are in effect yet. It was just something thrown out as apparently a negotiating tool.
Yeah, dimensioning more, and I think May the 8th is still a time frame when they're looking to begin the negotiations again. So I'm not real sure. I think it caught everybody by surprise that we thought we were moving one direction, and now seemingly we've been detoured.
I guess on the other hand, you talk about it. I mean, it's been mentioned for months.
Oh, sure.
I mean, it's really nothing new, is it?
Yeah, I think it's just because we were looking for aspects to come about this week.
Right.
I think that it's just all of a sudden a little bit more insult to injury, probably.
I wanted to point out the crude oil market this morning. When we came in and went on the air, it was down about $0.50, and I wanted to take a look here. Check it out. It's almost steady on the day now. We have June crude oil futures down just 5 cents. We're at 61.89, and July down 4 at $62. So almost even here. Heating oil, if we can take a look at that, see if that's having similar action. Well, look at this, Chris. It's actually higher. Of course, this is how we get our diesel fuel prices in. June futures now 0.7 cents higher at 207.8 per gallon. That's interesting. So things have really turned around here in the first 45 minutes of trade. We will come back in just a moment, and we will take a look at what's going on also in our livestock trade. We're talking with Chris Swift of Swift Trading Incorporated, and we'll be back right after this. We are back with you talking with Chris Swift of Swift Trading Incorporated in Nashville. And let's take a look here at our livestock trade and get updated on the live cattle first. Right now, on the June contract, still higher, Chris, 38 higher at 113.80. That is about a couple of bucks off our earlier low. August down 23 at 108.92. And we have the October down 55 now at 109.13. So well off our earlier lows by roughly about $1.80 or so on average. If you look at the feeder cattle trade, currently on the feeders, we have the August contract $1.25 lower at 145.13, nearly $3 off our earlier low this morning. But it is almost $2 off our high, too. What a swing that has been, almost $5 wide. September now at 146.47, and that is down 68 cents. Then on the lean hog trade, we opened up basically limit down across the board. Still are. The only thing trading is that nearby May, which is down $1.75. So your thoughts here, Chris, on the livestock trade overall. The cattle market had kind of a weak.
Yeah.
A week last week.
2 weeks of weeks.
Down several dollars on the cash trade last week. Of course, the futures took a big tumble last week, took out some technical support, right, on the way down, and the wholesale beef trade kind of falling apart. Has that been enough at this point to where they can maybe stabilize a little bit?
Possibly after today's reaction, you could see some slowing down. The basis is really wide in the fat cattle trade now with a 120, 122 cash trade established last week, trading 109 to 110 in the August contract. So there's a lot of basis spread there, but the feeder cattle have pretty much narrowed their basis down to $4 to $5 now. It was at one time 18, 19 apart, so they've been able to bring that down pretty narrow to $4 or $5.
So how are the Packers positioned right now? I mean, do they have plenty of supply or not?
Well, they sure put out like they do. They make it seem like everybody believes that they have all that the inventory that they need, and we just still have not gotten to a peak time frame for our beef consumption. So we're kind of at a little bit of odds, not really knowing whether our consumer is going to come out and consume a great deal more, or if the packer does have all of the needs that they need for this next 5 to 6 week time frame.
And I assume lean hogs are all tariff topped today.
I can only assume so, but limit down across the board, and that's very unfortunate because it seemed like last week we're starting to find a footing again.
All right, so we'll have to wait and see if they do come off of limit down. Maybe that'd be encouraging if they do trade before the close. Yeah, we'll have to wait and see. Well, thank you for coming in.
Yes,
Always
sir.
good to visit.
Pleasure.
You got Chris Swift. He's with Swift Trading Incorporated, based right here in Nashville. So, Janet, that's the very latest.
As always, thank you, gentlemen, very much for the insight.